How to arrive at drawing power in case of multiple banking arrangement. Let's take this example. Let's say there is a company called Company A Limited. They have inventory worth 100 million, receivables worth 80 million, 180 million. Against this 180 million, they have availed cash credit limit, basically sanction. They have a sanction of cash credit limit of 120 million. Okay. This 120 million they have availed from three different banks: Bank X, Bank Y, Bank Z. Now the question is, how do we arrive at the drawing power to disburse this 120 million or to manage this 120 million? At first we have to see in what proportion this 120 million is distributed by these three banks. So let's see the breakup. So that is given here. Sanction limit 120 million. Bank X has given 72 million. Bank Y has given 36 million. Bank Z has given 12 million. So 72 out of 120, that works out to 60% for Bank X. 36 out of 120 works out to 30% for Bank Y, and 12 out of 120 works out to 10% for Bank Z. So this is the basis. So taking the 60%, 30% and 10% as the base, we have to distribute these inventory and receivables among these three banks. So they are having 100 million inventory, 80 million receivable. Of this 100 million, 60% will go to Bank X, and 30% will go to Bank Y, and 10% will go to Bank Z, and these numbers are basically calculated on this 100 million. 100 into 60%, 30%, 10%. Similarly, receivables 80 million they have. 60% of this 80 million will go to Bank X, 30% of 80 million will go to Bank Y, and 10% of 80 million will go to Bank Z. So, if I total these two, 108, this is the chargeable current assets for Bank X. These total 54 chargeable current asset for Bank Y, and these total 18 chargeable current asset for Bank Z. Okay. Now, I am assuming there are no sundry creditors, and I am also assuming a uniform margin for both inventory and receivables. So, on this 108, let us deduct margin at the rate of 25%. So, 108, 25% works out to 27, and here it is 13.5, and here it is 18 into 25%, 4.5. So, if I deduct that margin, I will get to know what is the advance value: 81, 40.5, 13.5. So, this is the advance value. Now, this advance value have to be compared with the respective sanction limit, which is 72, 36, 12, which I gave in the beginning itself. And how do we arrive at the drawing power? Whichever is lower, 81 or 72, whichever is lower. So, for Bank X, the sanction limit itself is drawing power. Even though they have a higher advance value, only 72 can be considered. For Bank Y, whichever is lower, 36, and for Bank Z, whichever is lower, 12. So this is how typically we'll arrive at drawing power in case of multiple banking arrangement, and this is possible only when all the three banks are in a position to communicate with each other. They are able to moderate this. Thank you so much. We have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2,000 rupees. But for you, I'm going to give you a special offer. Here we go. Banking Credit Courses Bundle. This includes course number 1, Banking Credit Analysis Process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2. That is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like auto credit facilities, letter of credit and all. So far I have introduced 7 courses of 1,999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, collateral securities, a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over, some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complimentary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course.